Okay, welcome to the 2014 predictions and scenarios. Just before I do that, I just want to explain what I did on the trade here. This is the US dollar yen. Good support based on this price action here. Low RSI, divergent RSI, monthly S1, which you can't see, but I promise you there is one down here, and a Dow that's bouncing. So I'm going to sit in that, manage that stop, and then see if that can work. Okay, I got in at 104.03, so I've currently got 22 point buffer at the moment. So we'll see. Like I said, I'm still short this US dollar, but it's not rolling over at the moment, which is a great shame. This sort of stopping bar, this reversal bar, created a stopping bar on the next bar, so this level here is just holding. I'm still long the Aussie US. What I'm seeing here is this is my original entry on Thursday, pushed up, so a nice zigzag, and here we are with we're into the third wave here. So if we run out of steam, I may have to manage my stop. There's my intraday entry. There's my main intra-week entry. There's my stop out. Initially, I got in here on this level. So 15 points, minus 15 here. And we are, I am 112 here so far. Plus the intraday move here has added, so I'm minus 15 plus 112 and plus I think about, I don't know, about 22 I think. 132 minus, I can't work it out, 122, about 118, 117, 118 so far. Okay, and the US dollar yen is moving up, and the I tell you what, I do regret today though. I do really. Sometimes these charts make you feel a bit silly, and today I feel a bit silly because I didn't make enough. I did get something out of this, but nowhere near enough. Here's my entry. Call this in the room. Lovely support level. It runs into this area here. Excuse me. It runs into this area here. There's a fantastic sell. So I got out at a 50% retracement here. So I only got that much of the move. Missed this. Could have managed my stop and got the last leg, and then beautiful short set up there for that move to the downside. So I'm going, I've got to pay a lot more respect and attention to what the pound yen is doing. Okay, so if you've got any questions, punch them in this room, not the Skype room. Let me just make sure I can see questions. Yes, I can. Okay, so what are my predictions for 2014? Start with the Dow. Okay, this is the Dow on the monthly chart. And what I'm looking for here is, it's a nice clean move to the upside. So 2013 stopped here, and all we're doing now is pulling back to a monthly bar. And if you put the fibs on this on 2013, let's put the fibs on the 2013 move, which would put it there. You can see what I'm looking for is one last leg up. I think this little arrow here is my target. I think we're going to test something close to 17,000. Non-farm payroll on Friday. I've got the earnings season kicking off on Thursday. And there's so we've got a 127 extension actually puts us up at 17.5. But we have extreme RSI. Can I explain wedge short on? Okay, yep, I'll come back to that. So I think we could. Now we are extreme RSI. We've had RSI has stayed up here for a couple of 2 or 3 squirts through 2013. And you can see in the last real downturn in the Dow, we had 3 peaks of the RSI. We've actually got 3 peaks here, which are lower. So we are certainly vulnerable. On the pure basis that the elastic band is stretched to the upside, we are vulnerable to moves here. And another thing to note about what went on here is we had clean moves. There's a lot of optimism as these markets were moving into these highs. All the pullbacks were bought. It kept moving up, and so the key thing on this monthly chart was a spinning top. It wasn't a reversal bar as such. I mean, up until the point in which we started getting, one close here and this reversal bar here. This one here and this one here. It wasn't until we started to get these that this actually looked as if this could topple. And that's typical of a distribution pattern. This is typical of a very bullish market that suddenly encounters a distribution pattern. So, I'm looking for this just to do this kind of action here over here. So I think what tends to happen with reversals after a big bullish market in a distribution pattern is you tend to get a lot of noise, a lot of potential confusion, and all the retail traders are still piling in while the big players are potentially taking profits. So who knows? I mean, we could still go to 17,500, but I think the reason why I'm looking at this level here is because I think we've got about 3 to 4 months of chop of moving around here. And once the report season's over, and once we just can't find any more buyers up here, assuming we don't close above 17,000, I think we'll start to price in rate rises. Because after all this, practically zero interest rates have got to go up, and the markets do not like rates going up, particularly when they've been so low for so long. So I think the markets are beginning to prepare themselves for rate rises, but in the meantime, the lows are still bought, and I'm still looking to buy stocks. And so on the basis of that, I would still see, overall, the dollar staying weak, short to medium term. If we look at how the fibs plays an important part on the bigger picture as well, let's just put the fibs on this monthly. Whoops, hang on a second. we put the fibs on this 2007 high and the 2009 lows. So we actually closed above the 127 extension up there. So any faltering around there and close below 16,300, and we could see some early problems. But in the meantime, like I said, I'm still looking for this to push higher. If you look at the fibs on 2012 and what effect it had on 2013, then I need to do this. Hang on. Where are we? Yeah, the fibs on the previous year was that, and you can see on the fibs on, that is correct, isn't it? Yes, it is. That's the fibs on 2012. No, it's not. That's not where it is. Excuse me. I'm just trying to do this quickly and the 2012 was a relatively low range. June was the low, and October was the high in 2012. That's it. So you can see when we were consolidating last summer, we were consolidating on the 161 extension on the 2012 fibs. So that's interesting fact, is it not? But I think the fibs on this last big move is one of the most interesting things. Right, let's talk about the dollar. So for the markets to move up, typically there's a question in the room about what happens with the US dollar versus the Aussie dollar and the euro versus the Aussie dollar. Well, if you've got, let's look at the Aussie dollar versus gold. So this is what I'm looking for in the Aussie dollar. So we've skipped to the monthly chart that I like in the Aussie dollar. This is how I've got my monthly Aussie dollar marked up. This is why I'm bullish the Aussie dollar. I'm looking for the 2013 lows to hold to get a close above 90 plus, 92.50 ideally this month, and then at least get a retest of 93 and possibly 95, 96. Because if we start to break this wedge, I think we may even go all the way up to 102, up to this level of resistance. Okay, hitting on a massive, I'm a big wedge watcher, so I'm a self-confessed wedge watcher. So what am I talking about? I'm talking about a massive support line with a trend line over the top. So if the support line gets bought and holds, doesn't even matter if it gets broken, as long as it closes back above it very quickly afterwards, then I would look for a close above a trend line like this, and this generally creates a gush of buying activity because traders don't like to miss out. So if they see a breakout pattern like that, it tends to generate a rush and a big push into back into resistance. So that's why. So despite the fact the Aussie US has been very beaten up last year, yeah, we started the sell-off. Where are we? January last year we did into the early part of January we did well. Hit resistance at 106, dropped to 101.20, did a retest of 105.80, and after that retest we just only had one other couple of small waves to the upside, and we just kept selling. So I'm just looking for this down here to hold and break back up to at least the daily 50 EMA, and if it can hold up here and hold the box, retest it. If it can do this, if it can push up to the 50 EMA, push back to the box, then I think we can see 92 and possibly, you know, these upper levels up here. So I will be holding this until into this area here, and I will be selling some, then I'll be buying another position back at this level here, assuming we hold and get the right patterns and get the right confirmation, and then I would look to hold that into 92, 93 and possibly higher. So that is based on, sorry, I meant to, if you now look at gold, you can see how close the gold is ahead of the Aussie US. So at the moment the gold is leading the Aussie US to the upside. Okay, that's, we'll just switch between the two again. That's the gold and that's the Aussie US. Now let's switch between the, this is the Dow on the daily, and that's the Euro US. So not a million miles away, from the point of view that you've got last week, when we opened this year, all the highs are selling in the Dow. When we opened this year on the Euro, we came off this level here. So if the Dow can hold, we may find the Euro. At the moment I'm still short the Euro because of the 50 EMA and the resistance up here. But if the Dow holds up and this holds up, we may start to see the pullbacks getting bought. We may get stopped out as this creeps back up to at least this area here and possibly even breaks out to go higher. But all the time we've got selling going on and a lot of sellers bar above us, I will short highs until it stops working. Okay, so short to medium term, well, certainly short term, I'm looking for some further weakness in the euro against the dollar. But if we get down to these levels, if we do sell off here and get down to 135 and hold, then I think 135 may see that push back up to that resistance area in the coming months. And the euro took a long time. It took from the early November till middle of December to do that, to do 500 points. So I would look for the euro to come down here and then do, spend 2 or 3 months getting back up to the high before we roll over. So let's look at the monthly. So I'm looking for good 3-4 months of buying on the Dow. So in other words, a good start into second half of winter and spring for the Dow, and then see I've already got monthly fibs on this. The fibs on here at the moment is on the 2013 move. The 2013 highs was 138.80 on the Euro US, and the low was 127.30. And I'm just looking for this to at least come back and retest the 135 down here. At which point, I think we'll pull back into this area here and then potentially roll over. But I personally found the euro quite hard to trade last year, and I think you can see why. Because it's a relatively it's very slow and can be very range bound. Pound. I mean the best. Why is that not working? Hang on. No. Try again. Bear with me one moment. I'm having problems. Hang on. Oh, it's worked. Okay, it's worked. This is the monthly pound. So we've hit this trend line resistance. The trend line coming from October 98, touching the low of November 2005, the high of May 2011. So if we come back to this 163 and hold, and possibly do a retest of 162, I think we could, into the coming months, get up to 170. That's quite a big ask. That's 600 points. So that's a big ask. That may be beyond the pound's reach. All the time we are under the cosh here of this trend line, we run the risk of doing what the euro might do, go sideways and possibly lower. Into the spring and summer. So, I mean, if the US at the moment is growing slightly faster than the UK, but the UK is not far behind. Now, any shift in that, for example, if the UK goes slower and the US goes faster, which is quite possible, then this resistance could spell a lot of problems for the pound, and we could end up spending the year in a tight range if we're not careful. The UK is doing pretty well. We were one of the fastest growing economies in the developed world, and as a result, the pound has stood up incredibly well. So wherever we come out of this, if we can't hold 163, we're at least going to test 162 and lower, break the high here, 166.20, and we could easily be going up into 170. So at the moment this is a good bullish market, so at the moment just buy the pullbacks and see how far we can go with it. And on the daily, we're looking like we haven't quite tested the 50 EMA. So we've got something of a hammer-like bar on quite a decent level of support. So we break that high tomorrow, and we could be retesting 166 as we head into non-farm payroll. Close below, start breaking below 163.35 with non-farm payroll ahead of us, and UK rates on Thursday. Then, as long as they leave rates on hold, the market might take that as a signal to buy this up, push this up higher. So, bear in mind what I said about that monthly. We are trapped in something of a range, but break this high, and we're going to see 170 quite quickly. Pound yen. We've got very, very extended up here, so it's hardly surprising that is coming down. If you look at this one with the overall fibs, Screwed it up now. So this consolidation here last summer was 76.4%. We busted up into this area of resistance here, and now we're pulling back to a big bullish bar. So where can this one go? Well, if we can't hold one, if we close below this area here, I think even one red bar here, even close lower here, I think will create quite a drag on this, and potentially take it right the way down to 163, which is quite a way off. But we are just very extended. And in the early part of the year, the last few years, the pound has had a very weak start to the year. The cycle of the pound tends to dip into the beginning of the year, and then start to pick up as we come out of the summer. So it's not. If we look at January last year, January 2008 was a sell, obviously. Where are we? So January last year we had a spurt into April on this. This one tends to follow the Dow more. So in the first few months of the cycle of the year, in 2011 we had a bust up to the upside. In the first part of 2012 we moved from 139.20 into 155.40. So the dollar tends to get bought in the early part of the year, but this one tends to follow the indices. So if the indices are holding up well, then this one could do as well. So at the moment the Dow's pulling back, this is pulling back. If we hold here and then start to get bought in the middle to the back end of the week and finish the week well, we could start busting up here. And this one is so bullish. I am rambling a bit and conscious of that. I'm trying to capture what I'm doing. So this is decent trend line down here. Decent channel. That's quite a good drawing, isn't it? So at the moment, all we're doing is coming back to support and coming to the bottom of the channel. So if we can move sideways another couple of days, 50 EMA can start to pop up. We may dip down to this and then push up again to resistance. So we're closing week. We're closing with a heavy red bar on the first day of the week. So at the very least, we could see another 100 or 200 points lower before we test the 50 EMA, which might ignite another move to the upside. So early part of the week we are weak. Highs are selling. So tomorrow, if we see 171.85 with a reversal pattern, then I would look for a short signal to see if we can break this low and come down and test these support levels down here. Hi Mike. While I'm on the subject of the pound yen, I will just explain that wedge. So a short wedge would consist of a major level of resistance, which we've got here from this gap and this sell-off here. It will consist of high RSI and a trend line underneath the lows. This is punctuated with a reversal bar up there in the 5 minute as well. This is why I'm so frustrated missing it, because this just looked like such an obvious setup, really. I mean, if you just took a 5-minute reversal, I mean, forget the setup. If you simply took a 5-minute reversal bar with extreme RSI, you're hardly taking any heat whatsoever. 172 was the entry. 172.07 is the stop. I mean, how small is that? I mean, of course, really, I mean, to stay in this trade, you'd have to go above that 214. So it's a 15-point stop. And the risk reward is fantastic because it comes just with a hair's breadth, a gnat's whisker of the Jan 6, the overnight low. So I mean, even forget the sort of chart pattern. That's just the path of least resistance was down, and all you had to do was manage to stop to try and stay in it. Anyway, we're talking about predictions of 2014. So let me now turn to these images I've got. Does that make sense, Nigel? I've drawn this Dow as well. Before, just coming back to the Dow very, very briefly, this is the Dow on the monthly with just major support and resistance. So if you've got the channel, the bottom of the channel was last summer. We closed up above the mid of the channel, midpoint of the channel in December. We're pulling back, we pull back to the channel literally today. So we're sitting, it's here to me, we're just sitting on the on this midpoint of the channel. So the top of the channel would actually take us through 17,000, probably in the 17.5, 18,000 mark, by which time we'll be extremely overbought if we get there. I just want to share that with you. Right, now let me go to, we've just been finished talking about the pound. So this is the major support and resistance on the pound yen. So I've got 180.40 as the lows of 2004 and the lows of 1997 by the look of it, and 2002. You can see, when the pound yen was up here at 250, my neighbour was importing Japanese second-hand cars for three reasons. A, the pound yen was incredibly strong. Japanese cars are right-hand drive, and because Japan is so, and particularly Tokyo, is so crowded, they're incredibly low mileage because they can't drive anywhere. Anyway, so he was importing Japanese cars. So if we come all the way down to this level here, which is the 2009 highs, we will still be well within the range of this bull market. Incredible breakaway bull market. Okay, so let's now look at the next. Let's do the same with the euro. This is major support and resistance on the euro. I've got trend line coming across the monthly highs here, which we touched at 138.80, and I've got the 50 EMA down here at 133.56, and the major pivot level at 136.75, and we are currently 136.35. So start breaking down here and end up with a big topping tail on the monthly, and we could start to roll over. If we're going to break this major pivot level, we could be coming down to below 135. hold up here, hold 136.75 into the month, and move around in this apex, and we could bust up to 145. And with interest rates decision it's coming all week. The thing that's kept the euro US dollar high is that ECB have been talking about negative rates, in other words charging people to hold money on deposit, or certainly corporations to hold money on deposit. If that happens, then this will definitely break the high, and I think we'll revisit 145 pretty quick. But all the time we're under this apex, I will be shorting highs with a view to seeing that testing 135. And my next one is this pound Aussie dollar. This and the pound yen were fantastic. We tend to have a weak start in the year with the pound Aussie dollar, and we are currently 183, and this is showing 185.76. So any test of 181 would be a golden opportunity to get long this one, because that's the major support level. So I would definitely be buying a contract if we come down to 180, 181, with a view to this one going up to the 200. The major resistance and the next major pivot level is 200. So we have a weak start to the year. Hold this level here, I would buy, and I would sit tight until we got to that one. Obviously start closing underneath here and we're going to test those highs. But typically early parts of the year we tend to, this is the start of the year for 2012, start of the year for 2013, so we dipped on both of those occasions. So cyclically pound Aussie tends to be weak into the early part of the year, and then for the previous 2 years bust up. If you've got any questions, then fire away. US dollar yen. Seeing as I've just taken a long in US dollar yen, let's look at the US dollar yen. I'm currently nearly 30 points up. US dollar yen on the monthly, so major support and resistance is 101.75. The low at the moment, current 2012 low, it must be this 104 we've seen today. So next stop 110, which will take us under this trend line here. And that would give us a retest of this star, this reversal bar here. Can you see that? Let me enlarge this. I'm sure you can see that. Whoops. It's all got a bit funny now, isn't it? I'm talking about this up here. So, massive move off of this level here. Busts through the 50 EMA. Gets a bit, gets extended and a bit choppy here. But that's just a great wedge. That's a bull flag, isn't it? Here's the mask. Massive move to the upside. So all the pullbacks to support will start getting bought, and they get ready. They don't quite break it up, and then suddenly you get one bar that breaks higher. So next month we just continue. So very bullish on US dollar yen. Who's going to be the first to put the rates up? Well, I think it's got to be the US, because they're practically zero. whereas UK is half of 1%. So that's why the pound is currently so strong, because of the relative strength of the, well, certainly the slightly higher base rate. Next one. I'm going to move on to, I haven't got gold here, have I? I'll come back to gold in a minute. Let's have a quick look at oil. I'm not going to talk for that much longer. This is oil, real range bound stuff. And we're currently, well, I'm 94 last time I looked. So 94 would put us around about the mid-range here of oil. We've been in a pretty much a big box really since this major, humongous move up and then the huge drop to the downside. We've been caught in an ever tighter wiggle room. So there's a big box, major support at 86. We've got a lot of, we've had Libya come back on stream, we've had Iran come back on stream. There's been a lot of downward pressure on oil because there's plenty of it, basically. US citizens have finally started buying fuel efficient cars instead of gas guzzlers. US are now producing as much, if not more, as Saudi Arabia. So the supply demand says that this has got, at the short to medium term, it's got to stay weak. If the dollar gets stronger, then we could easily see this drop through this level and attack these lower levels here. Any increase in rates would definitely affect the oil. I think we will see quite a dip when the US initially raises rates. Okay, so just to summarize then, I'm looking for the Dow to still break higher, to close this gap that we've got on the back of non-farm payroll, to close this gap and break higher for the coming months. May end up with a lot of chop as we are obviously very extended, but high to possibly break, and then back end of the report season in mid to late May and into the summer doldrums in June, start to see this market pull right off and see a lot of profit taking, and then come down to some of these levels, which would potentially see the dollar get quite strong, and the normal traditional divergent relationship of the dollar and the equity markets would kick into action with a strong dollar and a weak Dow, and all the corresponding effects that would have with the Euro US and the Pound US. Okay, but as far as forex is concerned, the Pound Yen and the Pound Aussie Dollar are fantastic charts. We need to be patient for good entries in those. US Dollar Yen has got the potential to break up with the Dow. This tends to follow the Dow, so this is a good way of playing the Dow rather than getting involved with the Dow itself. Not a great close, so I will have to be careful with my long here. Any questions? We'll talk about, I'll wait to see if you've got any questions first, and I'll talk about the best entries, ways of actually entering this market. Any questions? So my short in the euro, I've got a little bit of a buffer, but not much. Well, that's a pretty good close actually. I've got to be careful with these trades I've taken late in the day, because you know, this 50% fibs has held today, and the euro's finished higher. So we break today's high, that could start to get back up. No, okay, no more questions. Right, best entries. Let's go back to this one. I called in the room a while ago now. Where are we? That's the daily. This is the pound yen. So intraday, this was pre-Fed. This one here was one of the best entries, and I think hammers and stars are ultimately 6-minute hammers and stars are ultimately the best entries. And this one has been so volatile. Pound yen has been so volatile. It's been great to trade. You get 60-minute star up here. You get the 60-minute hammer down here. The thing is with these, they can take a long time to kick in. And this one, I took in the back end of the afternoon on the 17th. By the time I closed my platform down, I only had a tiny sort of 20-30 point buffer. But by the time I woke up, I think I took it down here actually. I saw the support level, bought a 5-minute entry, ended up with a 60-minute hammer. I already had a buffer by the time the 60-minute hammer was formed, and then by the next day I had at least 100 points in the account, and I could basically day trade around it. So on my contract position, assuming you take a contract out, I could put my stop on my contract under here, and then I could buy and sell the rolling contract intraday just to make use of the way in which it held the 50 MA and that support. And that's typically what I do these days. I would buy a contract to buy and hold on a good setup like that, and then day trade around it to maximize the number of points that I can extract out of it. Because this to me is the pound yen is like the new oil, or the yen pairs to me are like oil used to be in 07, 08 and in recent years. They're nice and volatile. They like to stretch their legs once they get going. They get stuck in ranges like everything else, but on the whole they work pretty well. And look, the other thing I just remembered what else I was going to talk to you about. One other key aspect I was going to talk to you about trading, in modern day trading, is this. The bulk of trades, of big volume institutional trades, are now made with computers, programming, algorithmic trading. So the impact on modern day trading is this. It means you need to really pick your levels. You need to be very, very clear on levels, because computers are not making emotional, discretionary decisions. They are basically buying support and selling resistance, and not to put too fine a point on it. So you can see the algorithmic trading in this pound yen. We open the euro session with this cluster of buying activity here. We had a cloud. By 7 o'clock we'd engulfed the 6 o'clock bar. So pullbacks to that level were bought. And then what do? We pushed up into this resistance level where we sold off from on Friday. And what do? We move right the way back down to this support level here. And we're currently ending up at 171.12. And if you look back at the pound yen, it does this a lot, huge amount of time. It wiggles up. You've got 3 waves to the upside. You've got A, B, C, wave correction. Then the D wave, once we broke out of this support here, created a massive move here. So there's no nice little hammer. There's a hammer here. There's no nice little neat hammer here. It's just a cloud, just an engulfing bar. We tend to call them clouds these days. So again, it took from December 23 right into, I mean, literally into the close of the year. So while you and I are enjoying ourselves or shopping or whatever, all the algorithmic trades were kicking off, and then you end up with a nice neat channel, and then when they're finished with it, they just sell it off. So it means support and resistance is even more important than it ever used to be. That's the bottom line. Okay, that's the end of my presentation. So I'm currently, as far as stocks are concerned, I'm currently looking at currently doing low RSI and 50 EMA scans and picking up major support on some key stocks. I'll give you an example. I think this first group is a great daily trade. Yeah, this is all I've done. Notice what I've done. I've just picked off support and resistance. 110, 111 was a major support. Did a big run. They pulled back to 50 EMA at 117, and now we're at 130. Rolls-Royce has been a tremendous box play all year. The bigger the stock, the more likely I am to play a box play where I'm just buying the lows, the bottom of the box. Rolls-Royce was fantastic for that. Premier Foods was great for that. Done a lot of trading on Premier Foods. Looking for this to close above 130 now. Talks about Barclays look at these trades. I think these are, if you buy a contract in Barclays around about the 250 level, 255, and just long contract, perhaps a March contract, and we should be able to close that gap and get up to 300. Banking sector and the tech sector are my hot tips for 2012. And I'm looking on the tech side. I like, where are we? God, BlackBerry's up. BlackBerry's on a big run. That's not what I wanted to show you. Where are we? Trying to find a good tech stock. That's not a good tech. Okay, I'll come back to that. I have done some. I've updated my list on this. Okay, unless you've got any questions, I'll finish up here. I've grabbed an hour of your time as it is. So bottom line, be acutely aware of support and resistance. Look, if you're in a hammer and star, consider, if you've got taking a hammer and star, consider taking, if you're spread betting that is, consider taking a longer term contract and day trading around it. So, and just watch out for the M pairs, because they are, I think they've got a lot more mileage in them. And so, if you buy major support on a yen pair, if you're very, very patient for a major support on the yen pair, and perhaps it even looks a little ugly when you take it, just sit tight, because if it does work, they can pay you handsomely. And of course, just be patient for pullbacks in the pound Aussie dollar. Okay, unless you've got any questions, I will bid you farewell.